Welcome to first and only SaaS News Digest, featured on LinkedIn, where I cover news, events, and updates that are happening in the SaaS community worldwide. And our first digest today focuses on the software giant Salesforce and its investment activity. The company has been busy making deals and turning Salesforce into the major force in Silicon Valley capital. And last week, it's reported over $2 billion in annual gains from its investments. Salesforce Ventures, the company's venture arm, focuses on investing in other promising tech companies. And their last boost came recently when Okta acquired Auth0 for $6.5 billion. And this deal came just 8 months after Salesforce Ventures led a $120 million investment at the valuation of almost $2 billion. And this investment alone helped Salesforce more than triple its money between July and March. And last year also saw two of the Salesforce portfolio companies go public, nCino and Snowflake. Combined, these tech investments created more than $1.7 billion in gains for Salesforce. And back in 2019, Salesforce invested $100 million in Zoom. Then last year, Salesforce sold all of its 2.8 million Zoom shares after more than tripling its money. And right now, Salesforce stock is sitting at $4.38 in earnings per share for fiscal 2021. And $1.75 of that is coming from mock-ups of own strategic investments. Traditional venture firms used to avoid investing alongside corporate venture capital, but big companies were thought to have their own agenda and maybe couldn't be trusted. Well, Salesforce does occasionally compete with some of its portfolio companies, but it's coming better to know for using its dominance to give other apps an audience. And Salesforce benefits from the wide variety of cloud services it's able to offer to its clients. And startups win by getting connections to potential clients who otherwise would never take their call. The ability to make deals like this is establishing Salesforce's reputation as a very smart investor. And our next digest covers an article that says SaaS bootstrapping is the most sustainable way to build and scale. TechCrunch writer, I think Tank, says that the retaining freedom to create a meaningful product is worth more than even the bigger VC check. And many founders agree they don't want the VC money, but how can you build a sustainable and scalable product without venture capital? And Tank has a few tips based on his own experience, and the first one is to keep your day job. He points out that many of the world's biggest companies began as side projects, including Instagram, Apple, Slack, and even Twitter. Tank also says that when you are bootstrapping your new business, it is important to remember you're not alone. The fact is, 57% of startups are funded by credits and personal loans, and another 38% get money from friends and family. And only a tiny 0.05% of US startups are actually receive funding from venture capitalists. And Tank advises against wasting months trying to plan meetings and present pitch decks. Consider whether or not it might be better to be patient and stick to your own path. Tank also says that the many SaaS founders pay too much attention to vanity metrics that only measure short-term popularity. And this can be things like user acquisitions or total number of downloads. It's better to stay focused on your product long-term potential and how much customers are actually using it. The next tip for founders who want to avoid VC cash is to stop wasting time looking for co-founders. It is true that many VC prefers to back founders with more than one founder. But this doesn't mean that co-founders are required. It is okay to be the only founder, but focus instead on hiring the people who can do the things you can't. A well-rounded business needs people who can fill in the gaps in your skills and knowledge. And when you feel lonely or frustrated as its only founder, just remember, 65% of high-potential startups fail because of conflicts between the founders. Bootstrapping is absolutely possible, and it even may be a more sustainable way to build and scale your SaaS product. And our next digest today covers a Forbes.com article that says that the software startups are critical for enterprise companies. More and more big companies are looking at AI, machine learning, next generation data management, and cybersecurity startups. The startups are essential as enterprises undergo the process of digital transformation. And right now, startups account for 10% of most IT budgets. But we may see startups grow to consume 50% or more of the budget in the next 12 months. So what do you do to increase your startup chances of landing some of its IT spend? Well, writer Tom Tolley puts creative marketing at the top of the list. And that starts with offer workshops or start a podcast. The point is to do something that supports the aspiration of the enterprise you want to win over. And the next tip is to keep your first meetings focused on learning about the target company needs. Don't try to sell your solutions right out of the gate. Instead, focus on building long-term relationship and establishing trust with that customer. This connects to the next bite of advice when trying to sell your startup or software to the enterprise. It's essential to identifying their pain points. Know what enterprises is focused on and map out or align your solution to match. And perhaps the most important tip of all, it's essential to have a clear and concise message. Employees have to be able to remember and repeat the reasons they need your software solution. When they go to the table to discuss their budget, they need to have a simple and concise argument for buying your product. Maybe with these tips, you can convince the enterprise to adopt your software solution. I hope you enjoyed SaaS News Digest, and the SaaS News Digest belongs to all of us. It provides the value to the members of our community because of you. So please click on like or insightful button, share the SaaS Digest on your LinkedIn page, and let's work together in developing this community and setting new SaaS global standards. My name is Artem Gassan. I'm the general partner at SaaS Growth Ventures, and my superpower, I fuel growth and revenue for SaaS companies. And thank you for watching, and I'll see you next time.